Technology, diversity, wine, the redwoods, and everything in between. Welcome to the Northern California Bay Area, and one show takes you inside the real estate that makes it all happen. This is By the Bay.
Hey, what's up everyone? Welcome back to By the Bay. I'm your host, Dan Ancheta. Appreciate you joining us again, and today we have a really awesome guest. Her name is Gina Isola, and we go way, way back to our childhood, and we both found ourselves in the real estate industry in two different capacities. Gina is the branch manager of Doma Title in Santa Rosa, California, and she has a long background in the title industry, and we're really excited that you're here.
Thanks for having me today, Dan. I appreciate it.
So tell me how we got here. So how did you get into the title industry? What is title? Like people say, like title and escrow.
What is title?
Give us the background.
Okay. Well, I fell into the industry back in early 2000s, and I knew nothing about title. I didn't even know what an escrow was. So I came in completely green and came in as an escrow assistant working for multiple people back at North American Title, which is kind of a funny story because the company I work for now, Doma, actually acquired North American a few years back.
So
I totally came full circle.
There.
Yeah. So I worked my way up from an assistant to an escrow officer, and I am now running a branch and running my own desk as an escrow officer and bringing in more people to grow our branch.
So you're managing other title and escrow officers.
Yes.
And we're going to talk about what that means and what they do.
Yes.
And also have your own book of business that you're helping realtors and homeowners with facilitating transactions.
Absolutely, yep.
Cool.
Yeah.
So to give us, pretend like I know nothing. What is title? What is escrow? What is the difference?
Okay.
And why are you necessary in a real estate transaction?
Great question, and I get that all the time. So we have multiple types of transactions, right? Refinances and resales. So if you come to me and open up a refinance, we open up an escrow. So if it's a refinance, there's no deposit involved. We're just getting you a preliminary title report, telling you what's on there, what liens we need to clear, and then we're issuing the lender a lender's policy when we close.
Preliminary title report is what is on there?
It's basically like the instruction manual for escrow. It's who's on title, who our players are.
So who owns the house?
Who owns the house.
Okay.
What liens are on there. So a deed of trust, a judgment, anything like that we would have to clear to issue free and clear title at closing.
So lien is like a claim against the property?
Yes, absolutely. Okay. And then any other factors that are important. So if there's anything that is listed as an exception or a numbered item on a prelim that we need to deal with.
Okay.
And then there's also informational items like easements and things that are just there to provide.
What's an easement?
So the easiest way to explain an easement is right of way to a property, like a PG&E easement would be one, like a water line under a property. There's multiple easements, so it's hard to.
Somebody else that's not the owner access
to the property,
for
exactly.
A specific reason.
A driveway easement would be an example. Things like
before,
that.
Like there's two lots, and the only access to the one that's behind the front one is a common road.
Absolutely.
So the back lot has an easement to access that road to access the property.
So it would be important to look at that, like if you're purchasing a property, to see what your access is to your property. Is it going to be restricted?
Right.
Is there a way for you to get in and out that works for you? So you would look at things like that with the agent to talk and have those discussions before you either get into a contract, if you had a pre-listing open with that listing agent, or when you're in contract, you could look at the prelim when it comes out.
Okay, cool. So you're saying open a refinance, you get a preliminary title report, you're looking to see who owns the property, what claims are against the property, what you need to do to transfer the ownership from one person to the other, one party to the other. So tell me more about title and escrow and how those are different and what other things you're doing. Okay,
so the title itself is the insurance part of it, so the policy that we issue at closing. The escrow portion is the chunk that I do in my daily, so working with lenders, working with agents, sending those things out, prelims, deposits, doing all the intermediary work. So we are like the neutral third party between a lender, a mortgage broker, and an agent. And we also talk to the clients depending on what our clients ask us to do. Okay. Sometimes they want us to call a seller or buyer, sometimes they don't.
So in a purchase scenario, you're sitting in the middle, you have the buyers and the sellers, and the lender.
Yes.
And we're all talking to you.
Yes, absolutely.
And that's where all the money goes into and then comes out of.
Yes. So we balance our file at closing, we send out the payoff wires, we send out commission checks, we pay the mortgage brokers. We are the money middleman is what you could call us,
it's
or women.
Because when you buy a house, it's not like you like hold the deed in one hand and the check in the other, and you're like, okay, 1, 2, 3, switch. It's like, no, there's a third party that kind of collects all the documentation.
And if you purchase a home, there is a grant deed at closing, but it's not like the old school days where you would have a physical deed that you would get like when you pay off your loan.
Right.
So it's
pink slip to the house.
Exactly, right? No, it's more like just a document that gets recorded with the county. Okay. It's a public record that shows that you're the owner to the home. And in a refinance, maybe you have somebody coming off of title, you would do a deed and then record the new deed of trust or the mortgage. Sometimes you don't need a deed. If the people in a refinance are staying on title and they're staying as is, you just record the new deed of trust, pay off the old loan, and close the escrow. And then we issue the title insurance to the lender in that case.
I want to talk about title insurance.
Totally.
So just to clarify, so you're facilitating the transaction, and someone in the transaction pays you a fee for facilitating as a neutral third party, taking instructions from all the different parties to fulfill the contract and make sure that whoever needs to be paid is paid, and that at the end of the day, the new owners have clear title to the house and they own it without anyone else being able to say, I'm owed money or I deserve ownership rights in that property. And so you issue a title, an insurance policy.
Insurance policy, yes.
So how often do people actually use a title insurance policy?
More than you think.
Okay.
And I'm glad that you mentioned that, because owner's title, a lot of people may see the word optional when they see a closing.
It is on the statement, right? So there's lenders, but the lender's going to require title insurance to protect the lender.
Always.
On a refi or a
there's
purchase.
no workaround. Right. You're paying for that every time you get a new loan.
But for any homeowners out there, on the settlement statement it says owner's title insurance optional.
Yeah, and that's because it's kind of a long story with the CFPB and TRID.
And the CFPB is the Consumer Finance Protection Bureau. So and TRID is a law that we all have to TILA RESPA.
Yes.
I should know there's a something disclosure, integrated disclosure. That's what that's called.
So that's why it shows the word optional, because back in 2015 when that rollout happened, it's basically a long story of how the fees are disclosed, but an owner's title policy protects the consumer. Okay. So the lender's title policy protects the lender for the entirety that they hold the mortgage, but it doesn't protect you. So if you, let's say, there was somebody trying to gain, access to your property by way of a false deed, or forgery, or fraud, or an encumbrance, or encroachment, and somebody tried to take you to court to say the property was really theirs, that policy would protect you. And in fact, it could even cover your legal fees if you had to go to court, which could be,
It seems like something, so the owner's policy is good as long as the owner owns the property or their heirs, right? So as it transfers, is inherited by someone.
So it's a one-time fee. So unlike other insurance products that you pay annual, monthly fees, you're paying one time, and like you said, it stays with you the entirety of you owning the property, transfers to your heirs, and covers you. So from the minute you close escrow, if you have a claim, you're covered. I mean, you're talking, pennies if you look at the lifetime of how long somebody actually owns a property.
And it's protecting probably the biggest investment that most people have.
Absolutely, the biggest investment you have for minimal amount. So I would say, in my career, I don't think I've had one person who's turned down an owner's policy, because it would be silly to do so.
Somewhere along the line, someone told me that, and maybe you can tell, to dispel the rumor, that if you opt out of the owner's policy, that the lender's policy gets more expensive because there's like a discount thing that happens. Is that true?
That is correct. So there is a mathematical equation where it will bump it up. So by way of getting an owner's title policy, you're saving money if you look at it, because the owner's policy is obviously higher than the loan policy, but your loan policy itself will go down. So, and then if you refinance, you don't have to pay for the owner's policy again. You just pay for that one lender's policy and your escrow fee, which is minor compared to the rest. and you're covered.
No, that's good advice, because I think we're going to see a big wave of refinances coming in the future, because rates right now where we're sitting are relatively high, and I think that we'll see them come down, and there'll be a lot of refi business happening sometime in the near-ish term. Don't know exactly when, but sometime in the near term.
I think so too. I keep hearing that
everyone's
too.
kind of gearing up for that.
Yeah.
So what I'm learning so far is having someone that is managing your escrow and helping you get title insurance, that can explain to you these nuances and things and help you understand. It's not just like, here's a disclosure, sign it, be done. It's really important that the consumer understands what they're signing up for, why they're doing it, and having a title officer is going to take the time to explain.
Of course,
that.
yeah. Like when we get a preliminary title report, we don't just blast it to your email.
Right.
We actually open it up and look at the exceptions, and if there are red flags or anything that we need to make you aware of, we go through it line by line. And in fact, if it's something that your client is unsure of or unaware of or is uncomfortable with, we can even set up a call with a title officer directly to have those conversations to make sure we are in alignment with one another.
Right.
So it's important, because
it seems like it's maybe just as important as understanding how old your roof is or the condition of the home, because the financial aspect of it and being protected against future claims and other issues is pretty important.
It's a timeline of certain things that are on record on your property, so it's important to know what's on there. And like if you're purchasing a home in an HOA, a perfect example would be CC&Rs, conditions, covenants, and restrictions. What if you wanted to do landscaping around your property, but your HOA tells you you can't?
Right.
Do you want to move into that HOA?
Right.
Or what if...
Or at least understanding what those limitations are. There's paint color limitations and all sorts of other things I've seen in those types of documents. So
or what if you wanted to build an ADU, for a parent you want to come live on the property, but your property lies on protected, next to protected wetlands where you can't do that. Something like that would show up in a preliminary title report.
Interesting. We just had an ADU specialist on.
I know, I saw. Yeah. That was a great show.
So I'd be curious to see how the wetlands may be overridden by the new California law. Anyway, we'll talk about that.
That would be interesting, because we need those ADUs.
Yeah. So if you haven't seen that episode, go back and watch it. So I would think I'm understanding. So you sit in the middle, you facilitate the transaction. There's a fee that people pay. They wind up getting insurance. That seems like that makes a lot of sense. We throw around some terms like escrow and impounds, and sometimes those are kind of used interchangeably. Can you explain to people what's the difference between escrow when you're saying it and when a lender says an escrow account? What is the difference between those?
So escrow, my job as a whole, and then the escrow fee that's involved in the transaction are related to a title insurance company. The escrow that you are referring to when working with a lender is the escrow account, so the impound holding account for your taxes and your insurance, which you have that conversation when you meet with your lender to see if you're setting up an impound account. So they usually say escrows, or it's usually an impound account, but that can be a little confusing, but we break it down on the statement in a way that it clearly says escrow fee, and then when you get down to the impounds, it says taxes and insurance, and it's also on the closing disclosure, which has to go out too. So
fascinating.
Yeah,
it's interesting how all these laws that get passed create different disclosures and documents, and then people like you and I have to go back and kind of decipher. Here's what this actually means, like
for our industry
disclosure that we have, and for our clients, okay, let me translate for you. Here's what it is. Read the whole thing, of course, but let me show you how this actually works.
Yeah.
It's very interesting. So you just made the move to Doma Title. How long ago now?
So we launched our office mid-August in Santa Rosa. So a little over a month.
Wow.
Yeah.
Okay. How's that going?
It's amazing. So Doma itself, the culture, the company, the people that are there are...
I mean, they hired you, so...
Oh, thank you. Right. I appreciate that. Yeah, no, they have been warm and welcoming, and just the tools and the technology are amazing. It's like nothing I've ever been a part of before, and this is my third well, including North American, my fourth, but I say my third.
You're back.
Because I'm back.
Yeah, I'm back.
Title company that I've worked for, and it's nothing like I've been exposed to.
So what are you seeing in terms of the greater market? So your company's growing, and yet we're seeing the industry shrinking. We're seeing layoffs happening for kind of industry-wide. We're seeing interest rates go up, and you guys continue to grow, and you're opening a new office.
Yeah.
Right? This kind of like counter to what most other companies are doing.
Exactly, and we're getting that feedback too. Like, why are you opening up an office in the middle of this market? And I'll tell you, we are a publicly funded, backed company with a lot of funding and also the support and the tech tools that are going to revolutionize the title and escrow industry. So what we want to do is transform kind of what we've been doing for the last 100 years, which, to be honest, it works, but it doesn't work well. So an example would be during that refi boom, where we had hundreds and hundreds of closing disclosures going out. We could balance to those CDs within minutes. So we have machine algorithms that can literally balance something that an escrow officer would have to do by hand.
Right.
So we're not removed. I will always be here.
Right.
I'll always be there to pick up the call, to talk to you.
Right.
But it gives me more face-to-face with my clients to actually answer the pressing questions instead of just being behind my desk.
Right, so in the process of closing a loan, a refi or a purchase, the lender sends a closing disclosure, which is the last kind of look at where the money is coming and going from the lender's perspective, and then you translate it into the estimated closing statement and kind of balance that out. And what you're saying is that a balance sheet has to balance. That's why they call it that. And so all the money coming in and all the money going out has to match, and then we have to make sure those two things are in line. So you have a system, computer technology, that will balance to the lender's CD without you having to touch it.
Yeah.
That's pretty cool.
Yeah, and we have the ability to go in. It's not like, somebody said, like, is it robots taking over for you? That's not what's happening. There's still a lot of hand-holding.
Right.
It's still a lot of the traditional escrow. And for some people, they want the traditional. They don't want...
You can always jump in and change it if there's something that was not done correctly.
So we have the ability to do that. But by taking away a lot of the mundane tasks that we do, so think of a traditional escrow, of a resale is 30 days. What is that, 21 working days? You don't have days to lose.
And I wish I had 30-day escrows
I know.
right now. Everything right now is like 17, 21.
I know, which makes it even harder for you, right? And for me. So by getting rid of some of those, redundant tasks that we do that just take forever, I can be more present in the escrow and get the deal closed.
Yeah, I like that.
Yeah, it's great.
So speaking, I was just saying that escrow times are, from the time people get into contract, have an accepted offer, to trading keys, is getting shorter and shorter and shorter with the competitive market. 30 days was standard. Maybe it was even longer for a while.
45.
30 days. Now we're seeing closer to 25, 21, 17 in some
sometimes
cases,
10.
and sometimes shorter. and with a loan, if it's all cash, that's relatively easy, I think. I'm not involved in those, but I think that makes sense. But if you have a loan contingency, just the built-in waiting times that we have to do for compliance reasons can't really get shorter than about 10 or 12 days. Like, that's the very fastest. So that was prevalent for the last year, just really aggressive offers, no contingencies, short close of escrows, like waiving all sorts of contingencies besides title, essentially, was the only one that existed. What are you seeing in the market now? So I talked to lots of people that are out there selling and buying houses and doing that. I think you have a similar situation where you talk to lots of people.
All the time.
So we could have individual experiences. This agency's this agency's this, and they might be very different even though they're in the same market. But you talk to a bunch of people. So what's the summation of those things? What's the trend that you're hearing from the majority of your agents, and where's the market going, and what's the feeling out there, and how does that impact a homeowner or home buyer? There's a lot of questions built into one.
I think there's a little bit of fear out there with the interest rates, and I think that's important for people to have a trusted advisor, right, to talk to about that, because I think when people really run it down and see that they can still afford it at the higher interest rate, that takes away some of that fear, right? We tend to go to that place, especially when we were all living in a market that was, very minimal interest rates. I mean, it was almost like too good to be true, right? And how long can that last? So I think now that it's leveling out a little bit, it levels the playing field. So now those buyers that people have had that didn't even stand a chance a year or two ago are getting an opportunity to purchase a home. So while other markets in the nation are, I guess you would call it, falling or crashing, we're not. Sonoma County is remaining strong.
Right.
In fact, if you look at the reports that come out and you see the overall of what's opening and closing, it's very strong.
Right, there's a limited supply.
Yeah.
And still
definitely need more inventory.
Demand. Can use some more inventory. That'd be great. Very few homes on the market. And I think kind of globally, in terms of overall economic stability and the ability to weather a financial storm, we're in a cocoon here, and in a very inelastic market. So other places would have much higher volatility in their housing prices. They're reliant on industries that are being hit harder than what we have here, and they're the ones who you see going first with price reductions and kind of more buyer fear.
Yeah.
But I think in general, if it's a primary residence, it's always a good time to be buying.
Absolutely, it is.
I think there will be opportunities to refi in the future.
Definitely.
I don't know exactly when, but sometime in the future to get a more attractive rate. And if you're that buyer who's maybe been making offer after offer,
not getting accepted, and now's your chance.
I think that's a really good.
Yeah, no, we're
point.
seeing still really strong competitive offers. Escrows that are coming in with high contract price points. Obviously refis, and you can attest in your business have slowed.
We have none.
Come to a stall, right?
Yeah.
for a lot. So it's definitely changing that portion of it. But like you said, if people are getting in right now at the higher rate, they're going to be able to hopefully refinance out of that. So it kind of is great because it becomes like a 2-for-1, right?
Right.
Like you get a buyer in and you purchase, and then you can refi them out of that loan.
Yeah, I think that it's for us, it's we have a lot of buyers that are pre-approved and been pre-approved for a long time, and it's an opportunity for them to actually buy. And there's less competition, and there's less kind of what's the word? Industrial money. Can't think of the word right now, but there's institutional. That's the word.
Yeah.
There's less institutional money that's buying these houses.
It was a huge seller's market where they could literally drive the prices sky high. So you do see, a little bit of that out there where the seller says, "Well, I know my house is worth this," and their house sits maybe a little bit longer than they want it to. But honestly, I think we still have a relatively strong market considering all of the factors that we're up against. Like when people compare this to 2008, it's apples and oranges.
Yeah.
You're dealing with two completely different things.
I agree, and I think that it's not. We have a VA buyer in contract with 100% financing. We have done some FHA deals in Sonoma County lately, and it's actually really refreshing and nice because these are the people who, when they're having 15 offers being looked at, they go to the bottom of the stack.
Absolutely.
And it's really unfortunate because they're lovely people who need a home and want to raise their family somewhere.
And deserve to be a homeowner, right?
And they're qualified buyers, they just keep getting beat out. So it's actually nice that they're having an opportunity to
We're seeing
to
a
win.
lot of first-time home buyers too, because they
So for the first-time home buyers out there, what advice would you give to them in this market?
Oh yeah.
How would you prepare them?
Get with a trusted advisor. Actually have like an advisory team. And what I mean by that is an agent, a lender, a mortgage broker, a local company. I really mean that when I say that because so many people go online and they shop for their mortgage online. You cannot go into that person's door. You cannot talk to that person face to face. It is so important to communicate, and I think it's one of the things lacking in this business is communication and availability to clients. It's so easy, because of what we just all went through the past few years to do everything behind a screen and over a phone. But isn't it nice to know, like you could go into somebody's office if you needed to, and to sit down and really run those numbers. So like where we come in, we can run net sheets for sellers who maybe say, I don't think I can sell my house, it's not gonna work. Well, yeah, here's the numbers. This may work for you.
So that sheet is basically an assumption.
A rundown.
If you sell for this amount, you pay off all your liabilities and expense of
your price,
selling.
your commissions, all of the things involved.
Here's how much you walk away with at the end of the day.
A rough idea, and obviously it would tweak when you get into contract with the actual numbers.
It helps them get an understanding if they're moving up.
Yeah.
Here's how much equity we're able to take out of this house to move on to the next one. We bought our first house, or maybe we're going to move somewhere.
Or like if you had somebody who was selling and then purchase it, you can do both. You can run the numbers on the buy side too to see if they can feasibly afford with that money that they're taking to purchase that new home. So
creating a team of people around you.
Yes,
who
absolutely.
Are local, knowledgeable experts that are going to help you navigate this.
Yeah.
That's the advice.
Yeah, and just, and pre-approval. I cannot tell you how important it is to work on getting a pre-approval, or at least work on getting the steps in place to get to that point. And to not be afraid. Don't be afraid to call somebody. Maybe you're worried about your credit score, or what your financial future looks like. Have the conversation. Home ownership is possible. And I think what we do is such an amazingly wonderful thing. Like, we help people get into homes. I don't know about you, but like I feel good at the end of the day knowing that I potentially made a difference for somebody in that way.
I agree with you. I love what I do, and I enjoy it, and I have a really lots of satisfaction when I help a buyer get into a home. And it's interesting because they'll be like, my credit's not that good or whatever. It's like, dude, I've seen way worse. I've seen worse than you could possibly imagine. Yeah. And I'm here to help. I'm not judgmental about it at all. It's just, it is what it is. Life happens and things happen, and it's like, how do I help you from my perspective to build back and get yourself into a place where you can own if that's your objective?
Absolutely.
But yeah, it's never too early to talk to a mortgage professional to get pre-approved, and knowing the difference of someone who's just going to write down numbers on the back of a napkin and go, yeah, I think you can afford this, and someone who's going to collect your documentation, sit down and do some home buyer education, empower you to make decisions, and like run different number scenarios for you and show you how it works. That's a completely different thing than I called someone, I told them I make $100,000 a year, and they said I can buy X amount of house.
And speaking of that education, on our website, Doma.com, there's lots of articles, tools, tips. People can go and they can learn more about the company, about title. You can call my office, you can email me, we can set up classes. We have all sorts of information to provide. We have a local Facebook page as well where we post regularly about title. So
because you have
we want to educate.
You have all those computer robots doing all the hard work. You can go talk to the people.
Absolutely, and that's what we're here for. And there's no question that is too big or small. I would also add that in because a lot of people sometimes think their questions are silly.
So if someone's in contract and maybe they choose they're using a different title company, but they have a question, they can reach out to you and you'll help.
Of course, absolutely. We are here.
Cool. Well, we'll put your contact information in the show notes so people know how to get a hold of you and information about Doma. Before we go, is there anything else that we should know? And then I always have like one parting question. Anything else that you have on your agenda that you want to talk about?
No, I just want people to know that it's, again, call with any questions. There's no question too big or too small. And I want to be here to help people, whether it be an agent, their client, a lender, mortgage broker. Like, I am here to help. So we're customer obsessed. So
love that.
Yeah.
Okay, the last question I usually ask is, what's the number one piece of financial advice that you think everyone should know and you want everyone watching and listening to implement in their life?
Yeah, kind of going back to that piece of having your trusted advisors. It's really connecting with that and getting that information before you go to the table to write an offer with your agent. I'm not a licensed real estate agent, so I don't deal with that process, but I can't tell you how many times I've heard, in my tenure, oh my gosh, I had the offer, I was there, but I wasn't set up with my lender, I didn't have what I needed, and I lost it by this. Just being in alignment with those people, it really makes all the difference. And working with people who are reputable, who you can trust, again, not, going online to shop for a mortgage. It sounds great in theory, but as a person who works in this day in and day out, I see what those lenders bring to the table. There is nothing, that you can, beat by working with a local person. It's imperative, knowing the market, finding a good agent, finding a good lender, and working with a reputable title and escrow company.
It's great advice. I really appreciate you coming in. It's really
Thanks, Dan, for having me.
And
I
thanks
appreciate it.
for joining us on By the Bay. See you next time.
Thank you.
Stay up to date with Bay Area real estate. Hit subscribe now if you haven't already. Did you enjoy this episode? We love reviews in the Apple Podcasts app. We'll read yours on the show. This is By the Bay.